Could you reflect on your performance in 2024, particularly what went well, what went badly, and why? And I'm going to kick off with Paul.
Thanks, Annabelle. Well, 2024 looks like it's going to be a very good year in terms of our returns. Our NAV return at the end of November was over 20%, so very, very strong in absolute terms. It's also been a reasonable year in relative performance terms. We're ahead of market benchmark, helped by strong performance from listed equities, especially the US, and we're ahead of most of our peer group as well. So overall, I think it's a very pleasing year in performance terms in both absolute and relative terms. Perhaps not surprisingly, the strongest performance that we've enjoyed is from US growth stocks. We've had very good absolute and relative returns despite an underweight position to the Magnificent Seven. We also had some really good stock returns from holdings in some of our US value names like Vertiv, which is up 165% or thereabouts year to date. They provide cooling for data centers and have benefited from the AI boom. And that follows an exceptional 2023 where they actually delivered returns which exceeded NVIDIA last year. Also, Vistra Energy, that's up 320%. So it's got some really positive individual stock contributions. What went less well? Well, as I said, we were underweight the Magnificent Seven, so there's a bit of an opportunity cost there in performance terms. And our allocation to private equity cost us some relative return. Performance has been broadly flat so far year to date. So we may get some progress before the end of the year, but against very, very strong listed equities, that allocation has been a drag.
Thank you so much, Paul. Good to hear. Generally, it's been a good year. Jean, would you like to reflect on your performance? What went well? What didn't go quite so well, and why?
Thanks, Annabelle. Yeah, so also a decent absolute performance of 17% return on NAV, and that's to the trust year end of September 2024. I'm very happy to report a record dividend as well, even though we don't run a dividend, an income strategy, 21.5p dividend. So that grew 5% in the previous year. So beating inflation and making the dividend an 11 bagger over the 21 years that we've run the trust. So we like to look for multi-baggers in this team. So it's great that we can say that about the dividend as well. What went as planned? Well, I would say, it felt like a surprising year, but actually interest rates started coming down, and that was the plan, and that's very good for UK mid-cap shares, particularly interest rate sensitive. Although we're seeing the sort of the Russell 2000 reaction to those is being somewhat more extreme, so maybe there's some following to be done there by UK mid-caps. And we also saw that the Labour government got in, which was as widely expected. And then when you contrast that with the US, where I would say it was, everybody expected that it would be it would be quite tight. And actually the majority that was achieved there was probably not as expected again. And had a lot to do with the economy from what I hear, and how one party campaigned. The Republicans campaigned more on the economy, and the Democrats weren't anticipating that. So compare that with in the UK, where things have been more as expected, possibly not in the micro in terms of then when you start looking at the budget and the actual policies that are being put forward. But I think you can say that the UK companies are rather strong and able to adapt, particularly the best quality mid caps to those. The financial stocks that we invest in terms of what's gone well, the financial stocks, some of those have done rather well. Companies like Just Group, which met its financial goals 2 years ahead of time. So refreshingly, in contrast to the government, which sometimes isn't able to meet some of its goals, hitting those targets. That's a bulk annuity purchaser, so that's probably not in people's everyday chat at breakfast, but that's company's been growing like a weed. So that's Just Group. And then the other one is Paragon, which is a buy-to-let lender, has also had a really strong year. Where things haven't gone as well, probably some of the more cyclical companies, maybe more exposed to slowdown in China. And maybe ones where we hadn't really anticipated the level of destocking that has occurred. in some markets like medical. So two stocks that have been a bit disappointing, but which one, for example, Victrex actually, which has reported reassuring results today and is up about 15% as I speak. So, after the pain, sometimes there comes a bit of a relief, but that's a sort of cyclical aspect that's maybe beginning to turn now. So yeah, I'll stop there and let the third manager, Carlos, answer your question.
Thanks very much, Jean. Good to see those financials performing well, and good to see some good news after the pain with some of the cyclical stocks. Carlos, what went well for you and what didn't go so well, and why?
Thank you, Annabelle. Yeah, it was really a mixed year in emerging markets with plenty of positive developments, but also a lot of problematic phases. There have been elections in many of the larger markets like India and other markets across Asia. And then geopolitics didn't really help out too much. The recent strength of the US dollar and the threats coming from the US, especially about universal tariffs, are also causing uncertainty. Nonetheless, long-term performance since we launched the strategy has been outstanding. This year, the markets were largely moving sideways. We are up just a touch below 10%. We've so far outperformed our benchmarks. What really went well, and that's noteworthy, is Taiwan, followed by India, South Korea, and to the surprise of some, Turkey also performed pretty well. In Taiwan, particularly the exporters and the technology-oriented businesses. In India, we invested in a company called 361, which is a wealth management business, quite similar to a Julius Baer in Switzerland. And of course, with the increase in household income and wealth creation in India, they have a huge addressable market and are performing in accordance with that very, very well. In South Korea, we invested in exporters, especially in the medical and healthcare segments, and have invested in one of the world's leading exporters of medical healthcare devices for skin treatment, and they're market leaders in different geographies, including Latin America, but they've really benefited from a recovery in consumption. In Turkey, we invested in an airline software business, and as the airline industry has recovered, of course, volumes came in quite well, and that also translated into strong earnings growth for this particular business. What was more disappointing this year, but actually makes us quite excited more about next year and 2026, is Brazil. Brazil, a very fragile economy run by Lula now, with certain slippages on the fiscal framework, but also inflation, which is quite stubborn, and interest rates, which remain quite elevated. So the consumer is still somewhat negatively impacted by this environment. And then, of course, Hong Kong, which is increasingly under pressure, where the recovery of especially Chinese visitors hasn't been as positive as expected. Those are really the main markets. Another smaller market we're quite excited about, which also begins to deliver, is Vietnam.